These days, my credit score is floating anywhere between 771 and 776 as far as Equifax and TransUnion goes. And the reason why I share that with you is that there was a time when I was 18 or 19, even 20 years old, and I had a credit score that wasn't all that impressive. And my score has gotten to the point where I don't even need to check it because I know that it is already high enough to be qualified for some of the best interest rates on the market. So in this video, I want to go over some things that I did in my financial life, how I personally was able to improve my credit score to be over 750, and how you can do it the exact same way without all that much effort. So if we haven't met already, my name is Anfernee McLemore. On this channel, I talk about personal finance, investing, and side hustles. And if you think you'll find any kind of value in this video, then go ahead and tap that like button for your boy, as it really does help the channel out. Also, I like it when I see that like button number go up. But when I was first started on my credit score journey, in order for my credit score to be low in the first place, obviously I had to have some form of credit for me to have a credit score at all. So if you're just getting started, then the word of advice that I would give to you is that no credit is just as bad credit if you're trying to apply for loans. Because when you don't have any credit history at all, the credit card companies or the loan issuers don't have anything to base your credit worthiness on. It's like you're loaning money to someone you don't know or trust or don't know anything about. So the first thing that I did that was beneficial for my credit, whether or not I knew it, was by getting a secured credit card through my bank. And I vividly remember the day that I got my first secured credit card. I was in my dorm room at college, and honestly, I started to get some pamphlets in the mail, but I actually looked through some of the options that my bank provided because of a video that I watched by Graham Stephan. And the bank that I was using at the time offered me a $300 secured credit card. And if you don't know what a secured credit card is, there are different types and different forms, but the most common way to get a secured credit card is when you put a refundable deposit down on a credit card with your own money in order to get access to that credit limit. So for example, if I wanted a $1,000 credit limit on my secured credit card, I would then put a $1,000 deposit down as collateral for that $1,000 credit limit. But because I was young and broke at the time, I only did a $300 deposit, which led me to get a $300 credit limit. And as you begin to use your secured credit card and as you begin to make your payments on time, you will start to establish a credit history. And by having a credit history, even if it's a new one, you will start to be able to become eligible for unsecured credit cards, which are the most common that you see from American Express, Chase, Capital One, and all of the other credit issuers out there. With an unsecured credit card, they base your credit limit mostly on your income, and then they base your interest rate mostly on your credit score. So if you have a lower credit score or if you have a worse credit score, the interest that you will be paying when you don't pay off your entire balance will be higher than someone that has a higher credit score. But that leads me to the second way that I got a 750 plus credit score, and that is simply by just paying your bills on time. How I choose to use my credit cards is that I try to treat them just like cash. I like to use credit cards simply for the points and not for the flexibility of the payment. So something that I do every single month is that I put all of my groceries on a credit card, I put all of my monthly eating expenses on the credit card, and then at the end of every single month, I make sure I pay the entire balance down to zero. Now, some people don't recommend you pay it down to zero because they think that that hurts your credit score, but I would argue to say that once your credit score gets higher than 740, 750, there's no need to push into the 800s because you won't really see a ton of benefit from that regardless, but to each his own. But I choose to pay all of my credit cards down to zero every single month. What that does is that allows me to not pay any money in interest, but I still gain the benefit from cash back, from travel reward points, from all of the benefits that the credit card allows. And one of the major factors into increasing your credit score is actually your on time payment history. So the number of times you actually pay on time will allow your score to increase over time. But this is also a double-edged sword because even if you miss one payment or if you are late on one payment, that will stick on your credit score for up to 2 and I believe maybe up to 7 years. So you want to make sure that if you are applying for credit cards, that you are being diligent in this sense. And actually, I just read that your payment history makes up to 35% of your credit score. So this definitely has an enormous impact. So you want to make sure you're cognizant of that anytime you're paying your bills. And another thing that I do to increase my credit score is that I keep my credit utilization below 30%. So as I'm looking at my credit score on Credit Karma, I have about a $60,000 available credit limit, meaning that across all the credit cards that I have, I could potentially spend $60,000 before I max out all of my credit cards. Obviously, I don't want to do that because I am not able to pay $60,000 back every single month. But with that high credit limit, I am never getting anywhere close to overutilizing my credit cards, meaning that I am never getting above 30% on a monthly basis or holding over a 30% balance on a monthly basis for all of my accounts. And for some reason, the credit card companies like to see that you have the ability to spend the money, but don't spend the money that you have the ability to spend. It's kind of a weird scenario where they want to see how responsible you are and how impulsive you are to see that if you have a large credit limit, will you use it all and not be able to pay it back, or will you be responsible with what you have? And how you can do this by not doing any extra work. And how I did this was that I just applied for more credit cards, and every other month I switch out the credit card that I'm using to pay for my bills. So one month I may, for example, use an MX card, another one I may use a Chase card, card, but by having multiple credit card accounts open, I have a certain credit limit with each credit card company, meaning that while my overall credit limit may be increasing over time if I open new credit cards, the amount of money that I choose to spend on each card is staying relatively stable and that credit utilization is staying relatively low. But obviously, if you're just getting started like I was with a $300 credit limit, it's going to be difficult if you're paying your bills to keep that utilization below 30%. So this is something that you want to keep an eye out for in the long run. What I would focus on if I was just getting started is making sure I pay all of those bills on time and in full whenever possible. And then the next thing that you can do is just don't apply for too much credit all at once. You want to space out your increase to an extent. You don't want to just be applying for 15 credit cards in 1 month to get your credit balance high, because that signals a red flag to these bureaus and you may honestly get flagged for fraud if you continue to do that. So what I did in my personal case was that I applied for a new credit card when I was first getting started. I would say about once every 6 months, and now I rotate about 6 credit cards in my wallet. To some people that may seem excessive, and I thought about decreasing the number of credit cards that I have in my wallet, but as you'll learn later in this video, that's really not the best idea if you want to keep increasing your score. And the reason why that's not the best idea is that you want to keep your old accounts open so that you have the longest credit history possible. I still hold that secured credit card in my wallet. Even though I rarely use it, I still have it because that's the credit card with the longest credit history that I own. And by having a credit card with 9 or 10 years worth of credit history, that is probably holding up and overshadowing some of the newer credit cards that I have and keeping my credit history as long as possible. The length of your credit history makes up 15% of your credit scores. And if you decide to close all of your credit cards that you don't use anymore, even though they have a zero balance, you will be negatively affecting your score and you won't be able to achieve the highest score that you possibly can, because it takes a long time to build credit history up. There's no shortcuts to that. And I really just want to reiterate that the best way to truly build your credit score is to use your credit card on a regular basis and very responsibly. If you only decide to use your credit card for big purchases like vacations or houses or furniture and you just pay that back on a monthly basis, to me personally, that is going to be like funding a lifestyle that you really can't afford, because you're taking out a micro loan every time you want to do something like that. Instead, what I recommend is do what I do as far as spend it like it is a debit card, or if you want to save your credit card for those big impulsive purchases, then I would say that go ahead and save up the cash for that big purchase beforehand, just like you would make the payments after the fact. Just make the payments in your savings account beforehand, and then once you make that purchase on your credit card, you could then pay it back all at once and still take advantage of the points. How I like to use my credit card points is that I typically save them all up until December or for a birthday, and maybe $1,000 or $2,000 worth of points depending on how much I spend on any particular card. Sometimes I like to take advantage of sign-up bonuses. I know this year I took advantage of an Amex sign-up bonus and got 65,000 points that paid for almost 2 trips to Hawaii, but I definitely wouldn't say that you should spend more money just to get more points, because that doesn't make any sense. If you spend on your credit card simply like you always spend anyway, you would be accruing points as a byproduct of your daily living, and I definitely think that that's how you should treat your credit card. But one of the last things that I would definitely recommend you do is to avoid co-signing for other people's credit or other people's loans if you can avoid it. Co-signing to an extent may be a solution if you are truly helping someone that you know and you care about, but if you're just helping a friend or if you're just helping a sibling or anything, then I would say that you are exposing yourself to more risk in the long term by doing something that is much more than a favor by co-signing for a loan. Because by co-signing on a loan, you are not just an addition to the paperwork, but you are a part owner and you are as responsible for the person that is actually named on the loan or on the credit card for making those payments, and your credit score will reflect if that person defaults. So I would say that if a person needs a co-signer for a loan for anything, then that person probably should reconsider whether or not they want to purchase the thing that they're considering to purchase. And because I have personally heard stories of people who have co-signed on loans and that person has then responded by being late on payments, and that late payment then reflects on a co-signer's credit score as well, dragging both of those credit scores down and honestly becoming more of a headache than that initial favor was in the beginning. So I know that that may be a little bit of an unpopular opinion, but I am definitely of the idea that you should never co-sign on anything for anybody, and if you did want to help someone out for anything, I would just help them out with a cash for a down payment rather than being partly responsible for their payment habits for the next 20 or 30 years. And I guess a bonus tip that I can give that doesn't directly relate to credit cards is that if you're opening up other accounts like auto loans, like mortgage loans, and maybe even some personal loans, all of the things that you do with your credit card will affect how much money you pay for those other things. If you have bad credit card habits, that will cause you to pay almost double in interest for your auto loan payment. Or if you have bad credit, they'll cause you to not get the best mortgage rates, which could then translate to $300 to $400 a month or more in mortgage payments just because you have a bad credit history. So although all of this may not seem very important in your 20s, as you get in your 30s and 40s, and as you start to try to buy houses and buy cars and everything like that, you are going to wish that you built these positive habits now so that your credit score has the time to build and be as good as possible. And even with all that, it is just a good financial practice just to have good spending spending habits regardless. Not to buy things that you can't afford, to always live within your means so that you're never struggling or trying to live paycheck to paycheck. But if you found any kind of value in this video, then tap that like button for your boy, as well as subscribe to the channel if you want to see more videos like this. I do have a Side Hustle Saturday series going on right now, where every single Saturday I am going out trying to do a random side hustle in order to make $10,000. We are up to about $250 in that series as of the day of recording this video, and so if you want to check that out, that will be on the playlist section on my channel. And if you do want to check that out, I will see you in the next one, guys.